Well, the divergence is, excuse me, the divergence is continuing in the XLF. The E-mini S&P is lagging, but the XLF is on fire, and the NYSE has built negative deltas, or excuse me, not negative deltas, has been trading below the zero line, but our volume breakdown is producing positive deltas. This is interesting divergence, and I think that's real good. I'm not sure about our trade location at 46 and a quarter. You know, it's the beat period lows all the way down at 43 and 44 or whatever it was, 43 and change, 43.50 and change. But hopefully our 42 stop isn't too close. If it stops us out at 42, I don't know exactly what to do. I hate to sell the lows. Typically it doesn't work, especially when you have big divergence. If we do get stopped out at 42, I'll be watching to see if in fact the volume that stopped us out dries up, and maybe we can get back along. We've had a relatively quiet open. That's another thing that tells me that the selling pressure is drying up. If we're going to have continued selling, you would have thought the A and B period would have continued in one direction, but it didn't. So I don't think we have any intermediate sellers hitting the bids. So far, I think the probability is we're going to break higher. Now you can see the C period here opened up. We had the XLF just filled its gap, even though the S&P hasn't even attempted to fill a gap. So I'm not sure what I think about that, considering we don't have a whole lot of positive bias on the NYSE, and our 46.25s are right in the middle of the range here. The XLF has certainly diverged. I'm surprised that it hit the closing gap far, far before the E-mini S&P has. The question is, it's only above the AB period high by a tick or two. Where do we go from here? Is it just going to be a small consolidation day rotating down here in the 47s where this two-sided trade occurs, where the 47s were significant support, and all of that volume gets converted? What happens upon its conversion then? Does the gap below us become the target? If these guys don't step in and buy the market, then possibly. That's the question. The thing that's guided my trading after our original short has been the XLF divergence. Well, we'll just pause. We don't want to make any hasty decisions, and we'll see if the XLF continues in its upward climb. See if the E-mini S&P wants to catch up to it at all. We're having more positive deltas in the volume breakdown with the E-mini S&P than we have negative deltas. The highest volume, of course, was a negative delta, and that looks like it was the first bar before the ultimate low at 44 and change. So we'll just stand tight here, and the C period has still about 20 minutes to go. We'll see how the C period reacts. If the C period breaks below its low, the low is 45.50, we could be in trouble. We might move our stop. I'll have to think about that. Having said that, just talking about our stop, the XLF is regained its momentum, and now it's continuing to move up. There was a bar that looked like a potential stopping point, a reversal type of bar, but it doesn't seem to stop because the next bar opened up, and now we're moving higher. Well, finally, it seems that the E-mini S&P is realizing that the financials are rallying, and we actually broke the high of the E-mini S&P of the day's range here. The XLF is, I keep talking about this, but yesterday, because I missed these major divergences, it cost me a lot of profit. So I'm tuned into the XLF today a little bit. But the interesting thing is the NYSE chart was not able to make a lower low on when it tested the low at 45. When it tested low at 43.50. The next bar closed with a retest of the same low at 43.50, but the difference in the tick was negative 900 to about negative 400, and that bar was the beginning of this rally from the low at 43.50 up to this current point. That combined with the XLF, I think you're going to see, even though right now the majority of the NYSE tickets below the zero line, I think you're going to see a gradual upward shift, and that will help even the S&P, I'm assuming. I move this chart in field of vision so that you can see what I'm seeing. I think the support area here that we talked about, the 47 area, this red volume here is typically known to the majority as selling, but I have been arguing based on the dual auction market process is this is actually passive buying at the bid on a limit down here. Now we did get pushed down a little bit below 43, 44. If you look at the chart on the website for that day, which is April 1st, you can see that the block of support actually started down in the 41 area and continued. Actually, it started at about the 40-75 area and continued up to about the 43, and then there was light volume, and then it reinitialized in the 45 to about the 47 area, and then it was all up from there on April 1st. And that's sort of what we have here, reinitialization of the people that were buying here in the mid-40s, and then a little lower stepped in and took the market up now to where we are in the 50 to 52 range. Now what we need to see is the XLF to continue diverging. We're way above where the S&P is in divergence context, so I think we're all right. We'll see how it reacts when it gets up to the gap of yesterday, the close of yesterday, I should say. If you were looking for an area to get along long for retracement, the 48.25. Well, actually, that was the first period where from 48.25 to about 46 there was, some two-sided trade, and then we took out the low by just a bit. But I would say that this could be an area of support. The 49 area here is about 3 points off the high. It's about halfway in between where we broke up to where we stopped. Might be a good area for a long if you were looking for one. We're getting a pullback off the 52 area here. I'm not sure what's so exciting about the 52 area, but we're at about the 50% is the 47.75, so we're right at about the 50% retracement. 61% retracement is 46.75. So it's funny looking at the XLF. Since the mini S&P was a laggard, as soon as the XLF reversed, the S&P reversed, but the S&P for some reason hasn't been keeping up with the momentum of the XLF as the XLF closed the gap from yesterday. Sort of interesting relationship there. I'm not sure why the mini S&P followed the XLF so closely on the downside, yet didn't follow it up on the upside. Yesterday the market moved pretty big once it realized that there was a divergence that couldn't be changed the first attempt or the second attempt. Well, in all of the excitement this morning, I realized what the importance of the 52s was. It was the LNB period low that we broke down under during the gap. So obviously the 51 area and change was resistance, and that's where this trade up here came in at 4,700 on the ass sitting there passively to sell on a limit. Could have got you, 2 or 3 points, 3 or 4 points, depending on where you got out. That was a nice little rotation, considering it only took about 15 minutes. But I didn't. Those are the kind of nuances I'd like to consider in the future. But obviously, that comes with a higher level of experience than I currently possess. Just a lot of reference points, but you'd have to be there at a limit, and that's something that. I'm not so sure about. I used to trade with limits when we were trading agricultural commodities and so on and so forth. It worked. Sometimes you wouldn't get your price. The market would leave without you, but oh boy, I'm missing that rotation down from the C period. It's disappointing because I wanted to make sure that I, traded rotations today. But man, oh man. What can you do? The XLF is leading the way down. It's still diverged from the S&P, but now we're on the negative side of this trade, unfortunately. And that's sort of a drag. That's sort of a drag. We're going to take the 4650s out and look for a re-entry sometime later.